QuickBooks Pro Plus Desktop 2022 OneNote presentation, bank reconciliation, opening balance problem. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introductions, 9100, bank reconciliation, opening balance problem tab. Also take a look at the immersive reader tool, topic introductions, in the text area too, with the same name, same number, but with transcripts. Transcripts that can be translated into multiple languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic. Provide screenshots, links where applicable. Give accounting background to complement the presentation and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're looking at the bank reconciliation, starting off with the home page. We're comparing what's in our books as of the date of the bank statement, January 31st in this case, to what is on the bank's books. Typically, there being a difference due to timing differences, if nothing else, after having fixed the problems that are on the bank statement that are not in our books, which we did in prior presentations for the most part. But we still got that beginning balance issue that we're going to have to deal with. So we went to the banking dropdown. We then went to the reconciliation for the month of January 31st. We got this beginning balance issue. There's our problem right there. We got the $25,000, but on our bank statement, it's $30,000. We had to enter the $25,000 into our books for the first month of operations because that's what was on the prior trial balance that we needed to enter into our system to be in balance when we entered the beginning balances, but it doesn't tie out to what is on the bank statement for that beginning balance. Why might that be the case? Because we might have outstanding checks and deposits from the prior system that didn't clear, that we had in our books that didn't clear in the prior system. So we got to account for those beginning balances in our system. So we had to put it in our books at the $25,000 because that's what we had in our system, but it's not including those outstanding checks and deposits. Now, the funny thing is that if we compare this thing out, usually what will happen is the two things will kind of net each other out, because you could see here that the difference are these two mysterious items right here that are on the bank statement that we didn't check off because they were checks that were written in the prior period, which was the period before we started entering the stuff into our accounting system. So if we look at the bank reconciliation before adjusting for that, notice we're in balance. I could just reconcile right here and I'm okay. But it's a little bit funny if I don't really know what's going on and I couldn't explain it to somebody, right? If someone said, well, wait a second, how is this in balance when your beginning balance is wrong and you didn't check these two things off? And you look down here and say, yeah, you're right. My bank reconciliation, there's going to be a problem with it. So you could move forward and reconcile, but what you might want to do instead is try to at least note down what the problem is and see that it's that beginning balance problem. You're not going to have that issue going forward. And of course, what happened is the beginning balance should be lower for the cleared balance by the $5,000 to the $25,000. And then these two items should have cleared in the current period, even though we had written them in the prior period because they were the outstanding or reconciling items in the prior period. Now I'm going to do a little bit of an adjustment so that we can kind of see that in our report, make our report a little bit easier to see. So if we wanted to adjust that so the bank reconciliation looks more correct, and also so we can see when those items cleared, meaning I'd like to see those items clearing in the system, in the current bookkeeping system, even though they cleared for us in the prior period. I would look up in the prior accounting system the checks that were outstanding and deposits and enter that into our system. So I'm going to enter these two checks into our system because the bank statement is correct, but the dates are not quite right because they were entered into our system in the prior period. So I'm going to put them in to our system in the prior period when we entered before the cutoff date that we started our books. And then I'm going to adjust the beginning balance to compensate for that to the proper $25,000. So I'm going to add this. I'm going to say it's Epiphone. I'm just making up who we paid. $4,000. It's going to go to opening balance equity, or it might be if it was an expense account going to income. But just like when we've talked about the beginning balances, because this happened before the cutoff, January 1st, 2022 in this case, then it's not going to mess up the income statement, right? It's just going to be a balance sheet type of thing, because even if it hit the income statement, it would roll into the equity account. And so I'm going to add that one, and then I'm going to do the same thing and add the other one for $1,000. Once again, the date is before the cutoff date. Now we've got them in there, but the beginning balance is incorrect. So now I'm going to go back up to that beginning balance transaction that was put into place when I first started the account, which we put in the books at $25,000. I'm going to change it to $30,000, which will now net out against the outstanding checks of $5,000. So the net result will be an ending balance of the same $25,000, but it will be shown as a $30,000 that was cleared, and then those two checks that was written in the prior period netting out to that same $25,000. This is going to be adjusting an account that's in retained earnings, so that they're going to give me a little warning. I'm going to say that's okay. And then we're going to, once we get in here, then I can check these two items off. Now my beginning balance is at $30,000. That matches what's on the bank statement now. And I can check these two things off, and that'll give me the detail that I want. Now when I make my bank reconciliation, I won't have to put notes on it and say, well, yeah, there's this funny thing where the beginning balance is off, and then we have these clear checks, and I can see the detail of those checks that we wrote in the prior period clearing in the current period, which I would like to see, that detail ideally. And then I can, now when I generate my bank reconciliation, it'll be correct, meaning it'll show the beginning balance that is correct, the cleared transactions, and then we can focus just on those outstanding items. So next time we'll process the bank reconciliation. And just notice that this beginning balance problem, if it's a confusing thing, and it usually is for most people, it's not something that's going to happen after the first month of operations, because your ending balances will tie out to your beginning balances with regards to the cleared balances each time now. And notice there's a difference between the cleared balances and the actual balances on your books, because these items that have not been checked off are correct on your books. They're just not cleared. So that's what's going to be the construction of the bank reconciliation, which we'll do next time.